Broadcast is now starting. All attendees are in listen-only mode.
Good morning. My name is Marcus Solar. I want to thank you all for joining us this morning on a beautiful Wednesday morning. I want to thank you for joining Steve and Brooke with me this morning with regards to Retirement Analyzer. It is critical for us all to help our clients with their retirement income planning needs. This is a great tool to use with those clients on a case-by-case basis. I'm going to walk through a few slides with regards to retirement and insurance agency marketing this morning, and then I'm going to turn the slides over to them. They are the creators and ongoing founding members of that team. They are advisors just like you. They have worked with clients in the field, so they know what it's like to be on your side of the table, and bringing that expertise to the table and in founding and adding to that software on a day-to-day basis to make it more simplistic and very easy to understand for your clients as they walk through that report and keep adding information to help your clients forecast for their future. Again, my name is Marcus Solar. I will be going through some information on insurance agency marketing this morning. We will be covering a lot of information, so if you do have questions, please feel free to type those in the box listed on the right side of your screen there. We will try to cover those as we go, but we will start out with some information on insurance agency marketing this morning. We have been in business over 30 years. We do try to help advisors like yourself with your day-to-day costs. We do this through several different programs that we do offer, including our business builder. We help you increase your capital through either referral producer programs as you write business or as you refer business to us, other producers as you like our service. We invest back into your practice. What my advisors do through this program as they refer people to us is they take those dollars and help pay their marketing expenditures into the future. In the example on the screen, if you refer $3 million producers to us, that's an additional $6,000 back into your pocket. Again, that can help offset any marketing expenditures or office expenditures for you for the upcoming year. Also, we do have marketing reimbursement. We pay you $100 marketing reimbursement for every $100,000 in fixed index annuity business or single premium life business that you write on an ongoing basis with us, again, to offset any office expenditures now and into the future. We do have what we call our new producer builder program or new producer bonus program for advisors just new to insurance agency marketing. We have 3 separate levels. You can certainly pick an item anywhere on this screen during the first 6 months that you're with us. We have $100,000, $300,000, and $500,000 levels. You can choose anything from $750 cash bonus to an iPad, all the way to a 4,000 or 5,000 piece mailing and seminar coaching with one of our top producers to a Ritz-Carlton travel rewards package. That is entirely up to you. Once you do choose an item, the program does shut off. And again, it is a way to say welcome aboard, and we look forward to many years of partnering with you and helping you build your practice. We do have some of the best back office support. We try to save you time and money by doing the back office support through new business follow-ups. We try to take the $10 hour business off your table so you can do what you do best, which is staying in front of clients and prospect, driving that business through your office and increasing revenue. So anything from life or annuity quotes, any type of coaching or expertise, paperless contracting, anything we can do to save you time and money, we will certainly try to do that for you on your behalf. We do have a great creative marketing solutions team. Jacob Tedlock runs that department through insurance agency marketing. No matter where you are in your practice, whether you're just getting into the business or you've been in the business a long time, we can help you from newsletters, postcards, business logo if you're just getting in, all the way to TV and radio advertising, customization from that standpoint. So please call Jacob and his team. They'll be more than happy to help you no matter where you are in your practice, and help you achieve that next level. We do have the insurance agency marketing website. This is available to you 24/7 outside business office hours to help you with quotes, trends, news, online forums, anything you might need after business hours. During regular business hours, we do have the 3-ring guarantee. We do not have voicemail here in the office. We'd like to answer all calls coming in with a live person as an additional value add to you, the advisor. We do have insurance agency marketing or IAMS wealth management. This is the choice for financial advisors. It does help you increase your revenue and and deepen your relationships with your clients by increasing revenue for you and increasing your clients' retention. If you are interested in looking at gathering your 65 or any of your additional securities licenses, please call Charles or Mike in the IAMS Wealth Management Division. They'll be more than happy to answer any questions for you with relationship to that. You can reach them at the 800-255-5055. Again, ask for Charles, Mike, or Joan. They'll be more than happy to help you with any additional questions with relationship to that side of the business. We do have our Life and Annuity Academy. This is an industry recognized event. This is put on behalf of our practice here and typically a carrier that sponsors this event. We do bring in 4 of our top multi-million-dollar producers. It is typically either here in Omaha at our home office or at one of the top carriers. They usually talk about how they keep their prospecting and pipeline full, what their sales strategy looks like, what hurdles they've run into and how they've overcome those hurdles. They talk about large life and annuity case management. They talk about best income writers, wealth transfer tools, and much, much more. All the costs for this event are covered by insurance agency marketing and the carrier, so there's no expense to the advisor. If you are interested in learning what our 2020 dates are and the locations for our upcoming events, please give us a call at the number listed at the bottom of the screen, and we'll give you more information. Again, no expense to the advisor. We cover airfare, hotel, all meals, and all training. Please give us a call. Talk to any of the marketers in our office, and we'll be more than happy to cover any additional questions or information you have around our Life and Annuity Academy. So at this point in time, I do have the privilege of turning it over to Brooke and Steve. Again, I do thank you two for joining us this morning to walk through this software. Again, just to give you a little high view of the software itself, the software is a great tool to use. I've been working with the software myself since 2007. One question that I typically use the software in using it with my clients is, what if the retirement plan in which you believe to be true turned out not to be true? When would you like to know? Before retirement or today? Just to really forecast your clients and ask them, would they like to know today if they're not on track for their retirement, or do they want to wait until the first day of retirement to then maybe panic if they're not on track? Again, it plants a seed for your clients, kind of gets them thinking, and again, it really gets them in. And Retirement Analyzer is a software package that you can use. It's a foundational piece that you can use each and every year to show them how their progress or how their journey is getting for their end goal of retirement. So at this point in time, I'm going to turn it over to Brooke and Steve. Thank you so much for joining us this morning. Again, we're going to cover a lot of information this morning. So again, if you have questions, please ask as we go along.
Thank you, Marcus, and thanks you guys for being here. I appreciate it. We'll spend about, 25 minutes to a half hour going through the software, some of the new functionality we have, and then we'll take some questions. What we're going to concentrate on today, though, is you want to call it Advisor Alpha. You can call it that, okay? But what do you really do that's different than the norm out there, okay? Now, you could use Retirement Analyzer a number of different ways. You analyze somebody's retirement with regard to what they're doing now, Social Security, pension if they have it, their investments, okay, their risk, and then what they're spending today, their lifestyle. And we kind of go through that with everybody. We make it simple. That process really is simple. Okay, if you go through it and you do it over and over again, you can't help but become an expert at it. Okay, but then what we're going to do is we're going to show you how we incorporate some tax planning. Okay, we're big proponents of the power of zero strategy, where you actually try to help somebody, you know, if they want to do Roth conversions today, right, to alleviate their tax liability in the future with the tax rates currently being as low as they are. We're going to talk about rates of return and sequence of returns and things like that. So not only can you, you know, just put together a simple, if you want to, simple plan where you can show a client what they look like if they happen to make it to age 100 in retirement, but you can really drill down and get into this tax. Okay, and we'll show you today what we have, right? We'll show you today what's coming, and you can talk about it. In general terms, you want to get the CPA or the accountant involved if you're doing any major tax work, but to help somebody plan and then showing them that maybe doing Roth conversions today might help things out in the future. I mean, you can do that in this software. So we really have a high concentration on the taxation functionality here. We really do. So we'll take you through some of that today. Brooke?
Now, I want you to think about this too. If you're a more basic advisor and you don't want to go to that level, you can do that using Retirement Analyzer as well. So you can be as basic as you want, but there's all of these extra bells and whistles to really go that extra mile if you want to. So let's take a look. As Steve mentioned, we have a 3-step sales process. And actually, before we dive into that, really quickly from a training side of things, we have a ton of different platforms you guys can utilize, whether it's quick clips, they're on every header, every section of the software. We have Thomas Gold Talk, which is like Facebook for Retirement Analyzer users. You guys can chat in after hours, on the weekends, all that sort of thing. We have live training every day at 10 a.m. Central as well, and these are not canned presentations. These are, you log in, you bring your questions, you bring your file. We get through as much material and as many questions as we can in an hour, okay, not a canned presentation. We have a power line that's open from 8 to 5 Central, where live people actually answer the phone, which is pretty rare for tech companies nowadays. Lots of stuff. We also, as you can see in front of you, hold virtual track trainings. We're actually just finishing up our training for August and September here, but we hold those every quarter. We have an admin university that's starting next week. So if you have people that are going to be doing data entry for you and building your files, that is a fabulous class to send them to, where they can touch the keys, they can look at, keystrokes, designing out printouts, just walks them through all of that. We have 2 live boot camps remaining for 2019. So we're going to Kansas, September 19th and 20th. These are a day-and-a-half live roll your sleeves up boot camp. Okay, you bring your laptop, you bring your questions. We go through all different sorts of case studies. We collaborate as a group. It's just a fantastic training. And then we'll close out the year in San Diego, October 24th and 25th. Okay, so lots of different stuff you guys can dive into. All right, let's take a look at this 3-step sales process just quickly that Steve had mentioned. And today we're going to look at that, but then we're also going to go into some of the tax stuff. We want you guys to just know everything that we have available to you. So we have 3 input tabs, 3 output tabs, and then 3 solutions tabs. And just quickly, tab 1, we want to know about employment income. We want to know about Social Security benefits. Just so you guys know, you can build in any and all types of Social Security benefits. Okay, it's all there. Pension, same thing. You guys can show pensions. You can show whether they're taxed or not taxed, COLAs, survivor options. It's all there. Okay, let's go to tab 2. Now, tab 2, this is where you're going to build in retirement assets. We do have a Morningstar integration that is active and live. That is where if you want automatic account updates, you guys now have that feature. Okay. We also have integrations with Riskalyze and Redtail. Now, Riskalyze and Redtail, those are free of charge. Morningstar, there is a monthly fee for access to that integration. Okay. So we're going to build in all of the assets right here on tab 2. And if you scroll down, you can see we've got an additional assets section. That's where you can build in home values, things of that nature. We also have a SPIA and an income benefit annuity section. So you can, all different types of assets build into Retirement Analyzer. Okay, now down below we have 2 pie charts. And we're just showing the client, look, here's your current allocation, and we're comparing it to the desired allocation. We can see, they have a little bit more at risk in this file than they really would like. We'll address that here in a minute. Let's jump to tab 3. Also, I should have said back on tab 2, we do address rates of return. You can build that into the program. Now, on tab 3, this is where you're going to tackle budgets and expense plans. This is probably one of my favorite areas of the software. We have totally customizable budget templates. You can, right out of the software, email this to a client. The client can fill it out and click submit, and it's going to basically email you back. And all you do is click import, and it puts it right into the software. So there's no rekeying of the expense plan anymore. We call it automagically. Okay, so again, inflation is accounted for. You guys can end things like mortgage payments. You can run inflation rates per item. It's just so flexible. Okay, let's go ahead and close this up. We have a liabilities section, and then we have a future cash flow section. Okay, so mortgage balances, obviously you'd want to pop in the liabilities section. The future cash flow section, though, this is where you guys can do any and everything you want, whether it's a dream vacation, or maybe they're planning a wedding, or maybe they have an IUL that they can take tax-free income from. You can pop that in right here as well. It's just so flexible. Steve mentioned Roth conversions earlier. Very easy to illustrate in our program. Okay, at this point you're done with data entry. I want to hop to tab 6 so you guys can see what we're really analyzing here. And what it's showing us is that we have a red line appearing in 2047. The client's out of money at 86 years old. So not ideal, yes, later in life, but not ideal anymore for as long as people are living. So the 3-step sales process is to show the client, here's where you are today, and then you're going to walk them through basically step 2, where we create balance and show them how to maintain their lifestyle. And then in step 3, we inject a product to really enhance the overall situation. So just what I would say about this is what we call our quick report. And you can show the client a printout literally on one page where it's stacking these comparisons side by side. And it's very easy to tell the story and get the buy-in when you just simplify it to that level. They can see here that they have obviously a red line at 86. Then the second scenario, they have 230,000 at age 100. And then in the third scenario, look there where we get up over 518,000 by moving the product. So it's just a natural thing for a person to want that better number, and it's simple steps to get them there. Steve, anything to elaborate on there?
Well, and you have to step through the process, right? So you could conceivably sit down with somebody, and they might look like this, okay? And they're looking for advice from you, right? Okay, so there's no product in this section right here, right? Well, when the DOL stuff hit a couple of years ago, we weren't overly worried about that because we always have the client's best interest at heart. Comes first. Why would you not, right? So we'll sit here in this step, and then there's no sales here, right? We're just actually showing them some options, some things that some behavioral changes financially that they can make to actually make their situation better, right? And then add the product to enhance. If it doesn't enhance, don't add the product. And that's really simple, right? Like Brooke was saying, it's kind of simple. So you know how to, if you know a retirement analyzer, you know how to do this part. We talked a little bit about this advisor alpha. What do you do differently? Okay, this is easy, this part, 1, 2, 3. Now, it might not be if it's the first time you see the software, but, we have the support. We can get you up and running. You do the analysis on yourself when you first start. You go through the thing 5 to 7 times, and you start to feel comfortable with it. Stepping through this is great. But what if we said to you that in every one of these steps, you'd know how much tax over the lifetime that the client was projected to pay? And you could actually reduce that and make it better here by doing some Roth conversions now with the tax rates this low. And you could make these numbers go higher. What about it? Okay, so this process here has been in place for a while, and everybody's using it. We have about, 3,500 users of the software now that use this. But they want to go deeper. Because you know what we do? And trust me, you don't have to do this because we do it, right? We go under the hood and we take federal tax, state tax, the FICAs, Social Security and Medicare, long-term capital gains, provisional income. You name it, we have it in here. Okay, we're always building tax-wise. We just added HSA functionality where you can actually contribute, get a deduction, and then use that for specific medical costs when you tap it later in life. It's all in here, though. But the client doesn't want to see that. They want to see these numbers. Well, this doesn't look too good. This looks better. This looks best. Maybe we'll go with this one. But I think what we have to do is have you have the confidence in this to know that it actually works. Okay? And so what we're going to do is we're very confident in this. We have nonstop testing and all this all day, every day. All right? We're very confident in the numbers. But let's take this to another level now. What I'm going to do is I'm going to show you something. We call this the RGB model. Okay, and so Brooke, do you want to start here at the top and then I'll come through at the bottom? Is that okay? Explaining this?
Yeah, absolutely. Let's talk about it. So what on tab 2 I mentioned, that's where you're going to enter retirement assets. And in that process, what you're going to do is really look at how the money is taxed. So you're going to be building in, is it qualified? Is it non-qualified? Is it an emergency fund? So obviously qualified, we're looking at things like IRAs, 401k money, things of that nature. Now, in this example, we can see based on what we entered back on tab 2, we have a qualified balance of over $892,000, our after-tax balance 406 and change, and then emergency funds of $58,000. Okay, so it's showing us our total funds and our lifetime tax with the money invested, how it currently sits. Okay, now what we're doing in this target section is we're showing ideally and percentage-wise, or excuse me, not percentage-wise, dollar-wise, what we really should have in each category to be more tax efficient. So our qualified balance should be more at the 590 mark. Okay, after-tax balance is obviously going to be higher as a result of that. And then our emergency funds we can see there as well. So it's showing us, again, ideally what we need dollar-wise in each bucket. Okay. This whole thing stems around the David McKnight power of zero concept and really just figuring out how do we make a client the most tax efficient they can possibly be. So Steve, do you want to walk through the pie chart analysis of this?
Yep. And so basically what we want to do, here's the theory behind this, right? So when we get a deduction, when we actually put money into these qualified plans, right? What if we could use a standard deduction to get it out? Okay, so this number stems from, right here, this number here, right? If we take this and we grow it to the client ages of 70 and a half, and then we divide it by either 27.4 or 26.5, those RMDs are never bigger than the standard deduction. Okay, so we have, in this case, they have 892. It's going to be too much, because when we divide it by 27.4, it's bigger than the standard deduction. This is the number in today's dollars that they should have in there, okay? So we're going to look at some conversion amounts here, okay? So basically what we'd have to do is, and you can do these conversion amounts in 1 year, you can do them in 5 years, in 7 years, whatever you want to do. You can do 1 through 7. We kind of ended it in 2026, right? You can't go past that. There's too many variables after that, in our opinion. But you can do the conversion from 1 to 7 years. You can spread it out, okay? So here's what we got. If we do the conversion here, right, and now we have our after-tax balance, right, is basically going to be, the difference is going to be this, right? So we're going to have that much more. Okay, the emergency funds are off by a little bit, right? But look at the lifetime. Here's what I want you to compare right here. The projected tax, if I do nothing, is $1,092,000, right? But if it drops to $748, so we save about $340,000 in tax. And then the legacy change, right, the difference between these two is about $422,000. But even more importantly, this is what we have here now, 892. You could see it in qualified, right? At age 100 in 2061, we still have about 300,000 in qualified, right? There's still some life expectancy at age 100. But look what you have. Then you have this 1099 interest. Okay, you might have some non-qualified accounts. The same, if we take this pie chart here and move it to this pie chart here, in other words, do the conversion, and see how we're getting the red out. Let's steal a little line from an old Visine commercial. Let's get the red out. And we drop the red to 43%. Look what we have at age 100 now. If I put my mouse over this Kelly Green, $1.6 million in a Roth. And that's where the tax savings comes in. Because later in life, when you only have the Roth left, that's going to be where you're withdrawing from. And there's a lot of good things that happen there, right? You don't have to pay federal or state tax, right? Your means-tested Medicare Part B and D will not be affected if you're pulling Roth money. There's all kinds of good things that come from tax-free money coming in to pay expenses. Now, let me just show you two little buttons for analysis right here. We have the RMD analysis, so let's check this out, okay? We have the RMD analysis, and what this tells you is this is if I do nothing. Now, you see how big my RMDs are, and they're getting bigger. And here's today's standard deduction for a married couple. And here's the overage, and here's the tax on the overage. Okay, now if we scroll down to the bottom here, right, we have about $150,000 to pay in the overage tax. So I use the deduction to get some of it out. I got to pay tax on the overage. The amount over the standard deduction that I'm forced to pull out of my qualified plans. That's on this left side. Now on the right side, we set up our model to never breach 27,000. So here you can see the RMDs. Look how it goes right up and it touches it, and then it starts to drop back down again, but it never breaches it. So what you're doing is, in essence, you're actually using the 27,000 to cover your RMDs and get them out tax-free. So if you drop down to the bottom here, right, you had 149,000 to pay in tax. You got nothing to pay on this side after doing the conversion. And you can see a chart to that effect here. Now that's one. Now, you want to get deep into numbers, and trust me, Brooke said you can be simple if you want, you sure can. But here's the numbers that every piece of tax that you pay, or every amount of tax that you pay on a cumulative basis, doing nothing. You can see our cumulative tax is small. It's a lot bigger here because we converted, okay? But you could see, right, if we go down, right, there is a crisscross point right here. Let's call them inflection points or whatever, right here, right, where all of a sudden now, right, we're actually lower in our lifetime cumulative tax estimate on the right side after doing the conversion than we are on the left with doing nothing. And then if we scroll all the way down to the bottom, you could see here, look, 1.17 million versus 827,000. There's your difference. Okay, you could see Social Security taxation too is much lower here. 362 versus 196, and you can see it on a chart here. Okay, so I guess the point I'm trying to make is this, or we're trying to make is this really, and it's basically, you go as deep as you want into this program. If you want to start, going with the power of zero, and I think it's absolutely terrific, only because, right, we're in a situation that looks like this, right here, where, you know what, we got these tax brackets that are so darn low, and I think you have to be crazy not to at least think about converting and paying, the tax with another account, like a non-qualified or a 1099 account, especially if you have some 12% money still available to use. Okay, now you can see this in our program. This thing's called the bracket tracker, and it tracks how much, how much of the bracket is used up at 10 and 12 and 22 and 24, 32 and 35. Okay, so again, the point is that, and you want to raise taxes, you can actually increase the brackets in 2026 if you want, just by coming here and say you raise them 50%. So if I pick 2026 and I raise them 50%, I can do that, and I can make these the new brackets after the Trump taxes expire if I wanted to. So there's all kinds of things you can do here. But again, on the outside, like Brooke was talking, it's a real simple feel. But if you want to get detailed and you want to be an engineer for a day or for your career or whatever, we'll show you the buttons to push. Okay, and that's just one of the things you can do here, All right, Brooke, do you want to just touch on the Social Security provisional income, just to show them another, show these guys another, thing that we do tax-wise, that we calculate Social Security provisional income each year?
Yeah, absolutely. So this is something, again, that we're crunching under the hood automatically, and we're looking at, where a client falls provisional income-wise every single year. And you can see in this example, a lot of red bars here. Basically, the entire chart's filled up, which is meaning that they're paying a lot of tax on that Social Security. So we try to look at strategies, things that we can implement to make that basically a green bar instead of the orange and red coming into the equation. Not always possible. If they have a pension and other things going on, you can't always make that happen, but definitely something to look at. We also have the ability to show whether it's taxed at the state level or not. So very easy to just set those in the software, the settings that is, and have it trickle through and adjust the entire file. Anything else to add there, Steve?
No, that's good. You take yourself as deep as you want to take yourself in this program. Okay, now a lot of people aren't talking about this kind of stuff. Let me throw a couple other ones at you. How many of you in a normal appointment ask a client, is there a number where they never ever want their retirement accounts to go below? You want to catch somebody back on their heels, they're not going to bring that to the first appointment. Okay, and then you build it that way. We buy enough life insurance to hit this number here if you pass away prematurely. Okay, there's all kinds of things you can do in here. We always scoot by a lot of this stuff. Here's another one. What about net worth? You can see it on tabs 5 and 6. Look at the retirement assets. Look at the net worth. What about a net worth statement right here? And you could show, assets obviously minus liabilities, and you can see them, and you can print a really nice net worth statement right here. And it all comes from the numbers that you enter. Everything's printed to PDF. Can you imagine just having this and shooting it over to your client, or letting them see it in the client portal when we have that developed by the end of the year? They can come in and look at their net worth. A lot of people want to see that. Just many, many things here. Just because the program has a simple feel to it, a simple look to it, doesn't mean it's not pretty darn, it works pretty hard under the hood for you. I'll tell you, we got a lot of functionality under there for you. So these numbers, if you ever wanted to see like what makes up these numbers, we don't want confusion. Put your mouse over them. See? You could see how they change every year if you want. They change. You can do this in pre-retirement, and you can do it in retirement. Okay? It's all here. We use the mouse overs a lot. Because if somebody says to you, well, you know what, my parents died at 87, I'm not living a day after that. All right, well, you have 1.464 million, and this is what it's made up of. Okay, so you can do just about anything. So I challenge you for this, right? Okay, so, you use another program, that's fine. We don't say anything bad about other programs, and we never will. All right, but if you want to talk about simplicity, getting to the point, and then something that's written the way clients tend to think, because Brooke and I do the same thing that you do. We've sat in appointments and we've seen clients' eyes glaze over when they don't get something, and we'll go back to the drawing board and we'll make Retirement Analyzer easier. We've actually put it to the test in real life situations. Just check this out, okay? And tell us if it's not written logically and if it doesn't make sense. But I got to tell you, they have income. They have assets, they have expenses, they're not going to be working for the rest of their life, and hopefully these assets grow to a certain amount of money enough to not run out. It's really that simple, right? You want to talk taxes? We just showed you advanced tax modules. We can show sequence of returns. Let's jump over to this one, Brooke, and we'll talk sequence of returns here just a little bit, okay?
Perfect. Okay, so again, this is looking at what you entered on tab 2, and it's saying, okay, the money that's at risk, let's look at really a geometric return on that money. So in this example, 51.05% of the assets are at risk. And you can say right here in the rate of return section, again, it's showing your geometric average return, so 3.41%. We are going to check negatives first. So we're just going to shove those basically up toward the top. But you can see there on the right-hand side, it's going to bounce those returns basically all over the place. And it's just randomly picking them. okay, which FINRA loves random picking of returns. So you can see those negative ones hitting first, but then look right there in 2030, it goes positive 15.95%. So this is very realistically possibly something that could happen. So that's there on the right-hand side. Now, Steve, do you want to go through the upside, downside ranges?
Yeah, and you decide on the hiccups. You decide on the volatility, you know. You want to show down 30, up 30, go ahead. You can do it, right? But here's what we're showing you here on the increment page. So this 3.41 is what you've run in the program. And then basically the asset is getting 3.41 every year. We know that's not real life, right? So now what we're going to do is going to give you the ability to add this. Okay, and again, just like Brooke said, they're random. Okay, you don't know what's going to happen. Nobody does, right? I still can't believe the market's up here, right? For the problems we have as a country and the market's up here, I'll stop at that, okay? But the point is, we don't know what's going to happen. So let's take some random returns, and maybe we average out to 3.41. So this is 3.41 every year, and this is 3.41 with volatility, these returns. And look at the differences down here. Now, we run 3.41, and I'm looking at 518 versus 474. This is a difference of $44,248. It might not be much. You can generate different returns or sequences, and you could try these numbers. But look, if I take it down 25%, and now I have 2.63. So now I go from the 518 to the 357. Now I'm up by 160. And if I happen to come in at 1.75 geometric, right, now I'm up by $339,000. Again, the same works on the upside, though, right? If I'm comparing 3.41 to 4.38, I'm 400,000 better. Or 3.41 to 5.25, I'm 867,000 better. The point is, you just don't know. Okay, so this is the new functionality in the software, right? You look down at the bottom here. Those of you who have used the program, you know what to do here. You know what's going on. You can see where the assets are here versus here. And really, there's the 44,000 that we're talking about right here at the top. Okay, now watch this when I show this, because nobody knows, right? If I don't like this sequence, this number is going to change. Now watch what happens if I click generate and I move these around a little bit. Now you see now it's 118,000 negative. It could turn to a positive. If I keep clicking generate, my numbers are going to move around. Now it's 112. Let's see if we can get a positive out of it. And we might have negatives first, and now we have minus 57. Let's see. And look, there's a positive. So you could actually have negatives first. Look at these positives, though, lifting it up, not going higher than plus 20. So you could be anywhere. But that's what you can do now in our software here. Okay, just in case, you know, you have negatives first and then you have some random rates that could happen, this is what you might look like. So I think the whole deal here behind this webinar, what Brooke and I wanted to convey is this really. The program might look simple on the outside, but there's a heck of a lot going on under the hood. There really is. And again, you know, I challenge you guys, right? You have a case that you think might be too complicated, give us a call. Go through IAMS and talk to Marcus. Or give us a call. We'll jump on too. And we'll show you how to put it together in simple fashion where when you present it, clients will get it. Okay?
And just to kind of recap on what Steve said, lots of training opportunities. I know how it feels to be an advisor, especially when you're trying to learn about a new tool and not be able to make a phone call or get the help you need. So we are here to hold your hand. So let us know.
Hey, Brooke, do me a favor, would you? Let's talk about this branding a bit in the advisor video, if you don't mind, would you?
Yeah, absolutely. So these are add-ons. Obviously, IAMS, if you're working with them, is going to pick up the software subscription, but these are add-ons. So if you want to totally skin Retirement Analyzer, white label it to make it specific to your organization, a lot of advisors are doing this. They're showing it on flat screens and live with clients. You can make everything that says Retirement Analyzer on the live screens. Your company logo, every header becomes your company colors. That's either a one-time fee of $349 or you can just pay $15 a month. We also have an advisor video. It's really a promotional video you can embed on your website, or you can use it in a PowerPoint reel, you know, wherever you see fit. That's a one-time fee of $99. That's really just a client, or several clients actually, telling how Retirement Analyzer changed their lives and really allowed them to fulfill their retirement and live it the way they wanted to. The boot camp training we talked about earlier, that's a one-time fee of $299. Virtual track is also a $299 fee, and same with Admin University. So lots of upgrades if you want them. You by all means don't have to purchase them, but they're here if you do.
Let me leave you with this. I said, so what's coming toward the end of the year? So we have a 4-month plan here now. I'll just give you the 4-month update, okay? So we have a client portal that should be ready to go by the end of the year. Now you're going to be able to take the analysis of your choice, right, in here, and you can share that one with the client if you want. So in other words, you pick the one you want to share. Maybe it's the one that you guys did work on together, whatever it is, and you can share that. The client can go in and look at that. They'll have their own portal. They'll have their own safe where they can actually put their documents in there. They'll have their own calendar. Okay, it'll be a place that they can log in and check out what's going on. We also have some CRM functionality we're going to build into the software in the first quarter of 2020. Now, right now we have an archive. We have a lot now, but we're going to add a lot to that. So you're not going to have to leave the software, okay, to do this kind of stuff. So we'll look for that, first quarter of 2020. And Brooke and I have really dedicated ourselves to making the software better and better each day, each week, each month, each year. That's our job now. We maintain our client bases, and it's nice to have practice with the software. But we have our goal here now to make this software the best it can be and to help you change clients' lives. That's what we want. So, Marcus.
Again, the software is very independent, like you said, Brooke and Steve. It's not tied back to any carrier when you're making those recommendations. It's not tied back to any, product. It's there for the client. It's based on their plan. And then you can certainly come in with any type of recommendation you have for your clients at that point in time. So again, it's there really to help your clients with their plan. Whatever is a good fit at that point in time, you can certainly bring that in. And Brooke had touched on, the cost for the software. You can either purchase it outright, but if you are licensed through insurance agency marketing with our core carriers and doing business through us on an annual basis, we pick up the cost of the basic software on an ongoing basis. If you like what you see today, I will be reaching out to each and every one of you that have been on the webinar this morning. Again, I do appreciate your time. I can get you a 30-day free trial for the software so you can go out and take a look at it. If it is something that you want to move forward with, I can talk to you about the contracting and the business that we'd like to see. If you want to share, Steve and Brooke, what you see on an average as far as cases that come out of the software, you want to touch on that real briefly, or?
Sure. Yeah, we have about 1.4 million client files in the software, and we work with a lot of large producers. So, it's not uncommon to see your first case in the software maybe moving. And I don't know, this is what we hear, right? $350,000, $400,000 because the clients understand why it's important to take some of the red risk out or to do the Roth conversion and move it into something that you're in charge of, okay? And maybe you're doing some AUM and you bring $400,000 or $500,000 over because they can actually see for the first time the financial planning process and why it's so important. So the sky's the limit here, but we do hear about large cases over the max funded life. I think Brooke might have touched on that before. That they're amazingly big. And there's nothing more powerful than to do the monthly expense plan on the expense plan section, okay, or to bring in tax-free policy loan money to pay expenses. I'll tell you want to talk about something that explodes retirement funds and shows a much nicer picture. It's if you get your monthly expense plan in line and have clients understand how important that is, what you're spending every month. And if you actually have you be your own bank, I think they call it, right, where you can bring money out of those life policies in to intercept this negative cash flow. And I got to tell you, clients love that, right, because you decrease the gap and then this number in turn rises. So you could do some large cases with this software because they understand. That's what I would say, Brooke. I don't know if you have anything else to add.
No, I totally agree. And it just depends. I used to work a lot with educators, and those are people that had, an average of 50 to 100,000 in retirement savings, which obviously isn't a lot. But when I could go in, I could move the money. My average rollover was about 50 grand, but that combined with a life insurance sale, combined with a potential long-term care sale, it was a nice commission. So it doesn't always have to be, a super high net worth client either. And a lot of agents want to know, is this really only for retirement folks? No is the answer to that as well. Steve and I work with a lot of younger clients, high net worth clients, low net worth. It just is really, really flexible software.
And I'll just say this one last thing, Marcus, before we're done. I mean, it gives you a track to run on. You're not just talking about a rate of return. You're talking about, you need to know 1, 2, and 3, right? And then you got to talk tax. So it's not about products. Products just go along for the ride to get us to this number. You'd be amazed at how many you don't really have to worry about it. People having problems with product, right?
Right.
You don't. So that's one thing I would say. Hope that answers it, Marcus.
Yep, it does. If anyone has any questions, please go ahead and type them down there in the question box below. I don't show any questions at this point in time. I will, however, open this up if anyone has or would like some more information on Retirement Analyzer. Please go ahead and click the box. I'd be more than happy to follow up with you on that. Steve and Brooke, I do appreciate your time this morning. Anything you guys want to add before we wrap it up this morning?
No, sounds good. Thanks for the time and for stopping by, guys. And it was fun. So we'll talk to you, I guess, in another month, right, Marcus?
Yep, we'll be having probably another one here next month. But I will certainly. I do appreciate everyone's time this morning. I will be following up with each and every one of you after the webinar this morning. If you did get pulled away, I did record this morning, so I will get you out a recorded copy so you can listen to it at your own convenience. But I do appreciate your time, Steve and Brooke, and you all have a wonderful rest of your Wednesday. And again, thanks for joining us this morning. Thank you.
Have a good day.
You
Bye-bye.
bet.
Thank you. Bye-bye.